Bitcoin, Ethereum and crypto dive as Celsius adds fuel to the Fed fire this week. The Bitcoin and crypto market came under heavy selling pressure on Monday, fueled by fears in nearly all global risk markets related to high inflation and what the US Federal Reserve might do to tame it. At the same time, the drama surrounding crypto lending platform Celsius is adding fuel to the fire. At 15:30 Universal Time Coordinated, Bitcoin was down 18% over the past 24 hours and 23% over the past 7 days to $23,117, a level not seen since December 2020. BTC even briefly dipped below $23,000. At the same time, Ethereum stood at $1,220, down 21% for the day and 33% for the week, also revisiting its lows from January 2021. Notably, the sharp price drop brought the total market capitalization of all cryptoassets below the $1 trillion mark for the first time since January 2021. BTC passed 14 days. Not surprisingly, the market sell-off came along with large liquidations of leveraged long positions in both BTC and ETH. Between midnight UTC and press time, more than $284 in BTC longs were liquidated across exchanges as the price dived. The liquidations were the highest by far in more than 3 months. The crash in the crypto market came as global stocks also sold off heavily, with stocks in Japan closing down 3% on Monday, and the S&P 500 index trading down 3% 2 hours into the open. The crypto crash came as new data from the crypto research and investment firm CoinShares on Monday showed that investors last week pulled $102 million out of digital asset investment funds. Among the funds, those backed by BTC suffered the most, with $57 million pulled out during the week. At the same time, ETH-backed funds saw outflows of $40.7 million, while most altcoin funds saw only minor changes in investment flows. Commenting on the outflows, CoinShares said investment flows have remained choppy in anticipation of hawkish monetary policy. What has pushed Bitcoin into a crypto winter over the last 6 months can by and large be explained as a direct result of an increasingly hawkish rhetoric from the US Federal Reserve. Coinciding with the crypto sell-off today was news from Celsius that the platform had halted all crypto withdrawals for clients. The news comes after rumors had circulated online for an extended period that the company is facing problems and may not be able to meet its customer obligations. At the time of writing, the platform's token CL is down by close to 54% in the last 24 hours alone, trading at a price of $0.193. Over the past year, the token is now down a whopping 97% per CoinGecko data. Fed fears. Meanwhile, another key to fears that have taken hold of global financial markets now is the currently high inflation in the US, which has shown no signs of reaching a peak yet. On Friday last week, US inflation for May hit 8.6%, higher than the 8.3% analysts had expected. Still light at the end of the tunnel. Still, there is light in the tunnel for those waiting for the Fed to pause its rate hikes, although it may seem far away, Goldman Sachs strategist said in a recent note. At some point, financial conditions will tighten enough and/or growth will weaken enough such that the Fed can pause from hiking. But we still seem far from that point, which suggests upside risks to bond yields, ongoing pressure on risky assets, and likely broad US dollar strength for now. Meanwhile, leading voices of the crypto community on Twitter are working to keep the spirit up by sharing their own optimistic takes on the long-term outlook for Bitcoin and crypto. However long this bear market lasts, I think we can still count on Bitcoin rallying early and aggressively in response to the next big US dollar to euro stimulus program, wrote Tor D. Meester. During inflation, Bitcoin's scarcity shines. During deflation, its censorship resistance, D. Meester wrote. Others use technical analysis tools such as the Directional Movement Index, a measure of strength in price trends, to predict that the downside momentum for BTC and ETH has been exhausted and almost finished. However, soon after, both BTC and ETH went even lower, breaching important levels along the way. Alex Kruger, a popular crypto trader and economist, stressed that the crypto sell-off has more to do with panic across global risk assets than anything specific to crypto. According to him, bear markets have a way of exposing previously hidden weaknesses in over-leveraged projects, so it is possible that we see events like last month's unwinding of the Terra ecosystem repeat. Thanks for watching. Don't forget to subscribe so you don't miss any new videos.